All right, good morning, everybody. Good morning, good morning. Happy Friday. Gary, here's your sound check. Should be coming through 5 by 5, my friend. Good morning, Rob. Nice to see you today. Safia, nice to see you. I know we got a couple good mornings in there, Daniel. Always. Good to see you. Dimitri, Vittorio, Jason. Man, I love it. You guys are coming out of the woodwork. Carl, happy Friday, guys. We made it to the end of the week. Good job. Um, that didn't get filled pre-number. Show me a picture, Rob. I've had about 50 of them. Sometimes it taps your entry and there's just not enough contracts to fill you. Seen it. The worst part though, I'm okay with that because that's just, that's the world telling me it's just not my trade. But sometimes my entry misses me by a tick or two. It's when you miss your entry by a couple ticks, that's when I go back and I really reviewed it. I put my entry at the right spot. So if you want to take a picture of it, man, I'd love to see what you did, where you had your order, and see, oh, there it is right there, huh? I love it. We can look at a picture before we get going, right? Termination condition. I like it. Everything's coming down. You were hoping for that pullback, right, to resistance. Um, I like it. Good recognition on the top or bottom. Uh, a little early, maybe just a little bit early on that one. And let me show you. So your entry, and it's pretty cool because your entry, I'm going to show you, you are torn between a couple different trades here. That's a great termination condition. There's a trade, Rob, and it'll be a trade after you've got a little experience, and you'll be able to recognize it much faster when you have spent a little time with us. No, don't be torn. Don't be torn. It was a great read. It was an amazing read. So, okay, I'm like, hold on now. Guys, termination conditions may reverse the market, right? And the one thing, Rob, is there's a momentum style trade right here at this mid band at these small triggers. And the momentum went away. So that first shot at it is the momentum. And it really didn't work. If you got in at 69.50, that divergence prints, you're probably out. And then at that point, these large triggers are still up. And this is your sign right about here that we're getting close to being able to take that second shot. And then it just depends on what happens in the meantime. But it's one of those things. If it's an amazing termination condition, guys, we can talk about the momentum trade today. I'm becoming a fan of it. I've been studying a lot. But then if this momentum trade doesn't set up or doesn't work out, then it becomes that patience piece to let those triggers roll. I like the read, Rob. And then we'll go through and we'll see, what was that, crude oil or the ES? The ES. Are you on Central Time Frame, or is your computer set to Eastern? Your computer is on Central, so that would have been around 7:30, right? So right about here. Oh, that was right at news too. Yeah, so that's a tough one too because news makes things spike. I want to look at it just in the moment. It's 7:30. That would have been 8:30 my time. Sorry. No, maybe it wouldn't. That's right at news. 7:30 Central, 8:30 Eastern. I'm 8:30. Mine doesn't look like yours. I'm missing something here. At 8:30 Eastern. Yeah, so here I am right here. So it's that right. Oh, it's because it's all coming through. You got the termination. I've got a lot of stuff going on that you don't appear to have going on. Oh, You know why? It's because I'm looking at crude oil, Rob. I'm looking at crude oil. Guys, it's okay to make fun of me here when I'm looking at the completely wrong market. Wow, look at all that action off 8:30. Holy smokes. I was cooking dinner. Or cooking breakfast, not dinner. Yeah, details, schmetails. Let's go back and look at it, though. And let's look at it on the right time frame. That's a lot of movement right at 8:30, isn't it? Look at this. I'm still scrolling back through the 8:30 hour. Look at those trigger lines. Craziness. There we go. 8:30. Rob, you were looking for this right here. I had a fib that it did pull right back to. And then, of course, it was news. It was crazy. But you know what's kind of cool? Is even during the absolutely insane moments, and it's going to be hard to line these up because of the time frames. Look at how, from a great top, guys, do you see this? From an amazing termination condition, we get a full reversal. Rob caught it right when it was happening because he's getting good at reading his indicators. It gives us odds favorable momentum, and that odds favorable momentum breaking through the areas. Look at this, even in absolute chaos. This happened in a fraction of a second. It pulls right back to resistance, right inside of those favorable large triggers. Guys, if you're the flash or able to stop time, that's a beautiful trade with an amazing result, isn't it? Way too fast to do it. But I think that's a good segue because this is what we're going to talk about today. We're going to talk about being able to recognize that when the market's not going absolutely crazy, and making sure that you recognize it, that you're comfortable with it, and that you write a plan that has you focused on it. That's all we're going to do today. We're going to talk a little bit about rules. You know what? The tricky part is getting a bad fill on the stop if it goes the other way. Rob, the way to fix that is don't trade during news. I've seen the perfect trade, true story, tried to trade during news once on accident. I got into the most beautiful short trade ever. And I had my targets in place and it went to my target and then it reversed, didn't fill me, and it shot back up and slipped me about 7 or 8 ticks. Good morning, Jose. I'm actually 1 degree above freezing today here in the Pacific Northwest, which is kind of nice. And you just can't control it, Rob. There's no time to manage. And, well, it is if you were up $300 and it happened in a fraction of a second. So it's important to be able to manage them. I've seen people slipped so much money, and it's not worth it to me. So there's our segue, right? This is why every morning I come to forexfactory.com, guys, and I get this super, holy smokes, Gary. Go get you some deep dish pizza, a couple White Castle, a hot dog, and stay the heck out of the cold. Every morning, guys, first thing, Forex Factory, right? Forex Factory, what's going on? Obviously, we had that 8:30 news. You saw the reaction to it. I don't know what average hourly earnings or non-farm employment or even the unemployment rate is. I do, but I'm going to pretend like I don't because it doesn't matter what's in this column. I want to know when this release is for all the reasons that we just spoke of, to make sure that we're not in the way of something that's going crazy. And then, guys, once again at 10 a.m., we're going to have that high impact, that ISM services. I don't know what an ISM services is. If I click on it, I can find out what it is, but it doesn't really matter to me. All I know is that this can make the market go a little silly, and I don't want to be in the middle of the silly. I don't want to be that guy that gets run over and slipped out. I'll probably take our first break, go refill my water. Who knows? Maybe I'll eat a banana. But what I won't do is put myself in front of that. I think we coined the phrase yesterday, that freight train of emotion, right? So guys, that's how I start every day. Absolute train wreck. I set up my charts, and while my charts are loading, I'm checking news. I'm making sure that I'm not jumping in front of something. And then we're going to jump right into it today, guys. We're going to go through some rules. We're going to talk about the absolute best of the best. We're going to talk about learning to read your indicators. And then we're going to watch the live market a lot. Hopefully we're getting a lot of movement today. It'll be a lot of fun. We're also, every time you guys post a chart, I'm going to come back to that chart. Gary. And when I come back to your chart, we're going to talk about what I see. But what's important, it doesn't really matter what I see because everybody reads charts differently. I want to know what you see. Every time you post a chart in this room, I want to see rules. I want to see why you got into that trade. If you don't have rules yet, that's okay. I'm going to give you some today. But tell me why. And it may not be the strict rules that you write on your chart. It may be, hey, Mark, it was green, so I thought I should go long, and this is what I did. But what it does is it lets me know what you're doing. And if you're taking trades that are outside of the norm, if you're taking trades that don't make sense contextually for me, it helps me understand what you're doing, because the reality is your trades don't have to be my trades and your plan doesn't have to be my plan. If you tell me how you are reading the indicators to take a trade, we can talk about if that's the information that the indicators are actually giving, or if you've created a little bit of an opinion. So just a little guide here, guys. Write your rules on your chart. I'm going to put that back in the room one more time. It helps me. If nothing else, it helps me help you. So from the education page, 2 sections. T3 Fibs ProTrader, indicators, tutorials. Everything that I talk about, all the rules that I cover, the looks that we study, you're going to find them in this section. But the first one that I want to look at is the software user guide. And the software user guide, this is your NinjaTrader how-to. This is opening, closing, scaling charts. This is setting stops and targets. This is making sure that when it's time to roll contracts, we can roll that crude contract. We're going to do that on the 15th of the month. We're still a couple weeks out. For the weekend, guys, market replay, being able to come back and trade a couple days as though they were live, building your skill set, expanding on what you know, getting confidence through repetition. This is a big one on the weekends, guys. I know we all want to go out, hit happy hour, barbecue, maybe do a little surfing, whatever it is that makes you happy. But a little market replay goes a long way to building your confidence and your understanding. If you want to change the look of the indicators, that's fine. That's okay. They're your indicators. There's a couple ways to do that for you. And then what I want everybody to do this weekend, okay, this is your homework this weekend. If you're on day 1 or you're on day 1000, I want you to know how to do this. Delete your old charts, your templates, your workspaces. Go to the resource page, download fresh, and come into Monday with everything brand spanking new. I do this every Sunday so that Monday when I come in, my charts are absolute rock star, freshest of the fresh. So if you want to match with me on Monday, that's your homework. And I'll remind you at the end of the class as well. And then the most important section on this one, I think, scaling charts is awesome, but being able to take a picture, to be able to take that picture, put it right into the room, and get that feedback. Guys, this is where you will excel. This is where you will grow with the software exponentially, because the path to becoming a confident trader, ASAP. Say this all the time. We cover this about 10 times a day. The first thing, and guys, this has been true for as long as there has been an educational room, post your trades in class. The people who post the most get to where they want to be the fastest. The people that ask the most questions get to where they want to be the fastest. The people that track their performance in a spreadsheet, that go back and study what they've done to get better at what they do, those are the people that reach their goal of becoming a professional trader the fastest. So understanding and being able to take a picture is so important. When you downloaded your demo, you got Capture software. It's already on there. You should have been run through, gotten a screencast account so that you can save the pictures. So let's take a picture. I'm going to click capture. If I hover over just one chart, it's going to give me a picture of just one chart. What I really need from you guys, every time you take a picture, remember, you want the best information possible. I want you to click and drag from the upper left-hand corner to the bottom right-hand corner, making sure that you get timestamps, getting some prices in there, getting enough information to see what's happened and what is happening. When you release that mouse, guys, all you got to do is click that camera, capture an image. After you capture an image, here comes your image preview. Remember, guys, this is the most basic capture tool. It's absolutely free. You've got it. You can use these tools. Maybe you want to identify termination conditions, mid bands being hit, trigger lines. Maybe you took an entry right here, so you want to give me a square around it. And then the most important thing you can do is use this call out button. And we're just going to garble a little bit. But you and I are going to have a conversation. Mark, this is what I saw. This is why I did what I did. This is how I felt. Did I do it right? Did I get in there? Here's my rules. I feel like I followed them. Did I read them correctly? And then once you get this information on the chart and it's time for you and I to have a conversation, two ways to put it in the classroom. You can click copy. And when you click copy, it's just going to put it on your clipboard. You can come into the room and either Control V if you're in the pop out, or just paste it and it's going to give you the picture. Or you can click upload. And when you click upload, it's going to provide you a link to screencast, and screencast is that picture in the cloud. It goes from your capture software straight to the screencast cloud. I'm going to copy that link. I'm going to work my way over to the chat room, and I'm going to post my picture in the chat room. And then, guys, I'm not going to miss a picture. If I do miss a picture, let me know. If I miss a question, hey, Mark, I posted just a little bit ago. I was curious about this. I'm going to repost it for you. I go through the rules first, and then we get into charts. We get into chart reading. But you can post all day long, as much as you want, and I will do my best to get to each and every one of them. The second half of that path to success, if you remember, was using a spreadsheet. And this spreadsheet was provided to you when you downloaded your software. Look in your Nexgen Study Picks folder, and there's 3 tabs for the spreadsheet. And I'll show you the one. If you're brand new, coming back, maybe you don't have the spreadsheet on your computer anymore. I'm going to go to the tutorial section and I'm going to click on the trade tracking sheet and give you a link so that you can download it. But this spreadsheet does a couple things for you. The first tab is where you're going to track everything that you do. Every time you take a trade, you're going to track it. When you track that trade, you're going to annotate the chart and you're going to create a link so that you can go back and study it the next day. And if you get in this habit, every morning study the trades you took yesterday. Every morning analyze them without that emotional rush of being in a trade. Look at what you did. Did you follow your rules? And look at what you can do better. You'll start to recognize patterns in yourself. Maybe you trade into termination conditions. Maybe you jump in on your entries. And then as you grow and you start taking pictures of the trades that we're about to talk about, that high probability trend trade, you can begin a catalog of each and every trade that's bringing you success, that follows your rules. You can work on your management, your chart reading, termination conditions. And then there's the final page. This is the client trade examples, guys. Download the new one if you don't have it. Almost 70 pictures of the highest probability trend trades for you to study and compare against. Opportunities for management. The second trade, the HVA trade, a lot of chart reading things there for you. And all of that is on the spreadsheet. And then you need to be able to get these pictures into the spreadsheet, guys. And it's pretty simple. That link that I copied, that I posted in the room, is still on my clipboard. So I'm going to paste it right into my spreadsheet. Once I post that link, I'm going to go to my Insert tab because I don't know what all of this is. All I know is that it's a link to something. I'm going to go to Insert, and I'm going to click on this link button. And what that's going to do is provide me a hyperlink. I'll put the address right into the address bar, go into Google, eBay to get some new golf clubs, whatever. And then under text to display, I'll put winner, loser, rules followed, rules broken, bad management, great management, whatever I did in the moment. And when I click enter, now I have an active link that I can follow, that I can study, that I can begin building that repetition. Those Nexgen trader favorite looks, guys, I'm building even more. Keep posting your high probability trend trades in this room. I'm going to steal them and add them to my collection so that you'll be able to steal them and add them to your collection. I'm working on management, chart reading things, termination conditions, really just filling this spreadsheet and then taking the time to go back and study it. That's your path to success, guys. And that's exactly what you should be doing. If you need help, taking a picture, if you need help using the spreadsheet, all you have to do is raise your hand, guys. Yesterday, we had a lot of people come out of the woodworks. They had questions, and they got the courage to ask the questions, and they got their answers, and it was pretty cool. Guys, every time you upload to Screencast, it goes right into this digital catalog for you. You can come back and study everything that you've done over and over. You can view it. You can share it. Or if it was just a test for the class, you can delete it. And it's even going to make sure that you want to, so you don't delete the wrong thing. So use your voice if you need a little help. And then that tutorial section, guys, I've already got it open. This is your roadmap. This is your foundation. This is where you're going to start stacking building blocks. You're going to create a very sound foundation, and then you're going to work your way from that foundation to where you want to be. So this is where I'm on bended knee, hands together, and I'm going to ask you new people. And I know that I have new people in the room. I've got demos in the room. I've got people that are coming back and looking for consistency. People that have strayed from the path, didn't write a plan maybe, started chasing things, did it their way, which is totally cool. It's normal. But now you're coming back and you're saying to yourself, hey, you know what? I want that win percentage up. I want that consistency. I'm done having fun in the market. Now I'm ready to start making money. Guys, your first 30 days, I want you to focus on the 5-1 trend trades that happen after a termination condition. This is what we call a high probability trend trade, guys. This is a high probability trade. It's the only high probability trade that I teach. And it means that each indicator on every chart agrees for the trade. You have the most momentum. There's nothing in the way. Your entry, nothing between you and your target. Guys, the high probability trend trade, the first 30 days of your time with Nexgen is going to teach you the most important skill that you can have as a trader, guys. It's going to teach you to read your charts. It's going to teach you to read your indicators. And as you develop a mastery, you're going to be able to open up your Nexgen charts. You're going to be able to look at them, and you're going to understand 3 essential elements, 3 key concepts. You'll be able to identify where the market is likely to continue, and then use that continuation point for an entry for a high probability trend trade. You'll be able to recognize where the market is likely to go, and that's going to help you create your profit targets as you develop a management plan. And you're going to understand where the market is likely to stop. And these areas where the market is likely to stop, we call them termination conditions. And they essentially mean that the trend may reverse, that you no longer have a clear path to your target, which means that you no longer have the advantages that the rules provide. Those termination conditions, those likely to stop areas, will also provide you that amazing anchor for the high probability trend trade that you're going to be focusing on for 30 days. After a termination condition on your chart, looking for those rules to be met, is a trade that typically wins 70 to 80% of the time. I'm going to teach you how to recognize it, and I'm also going to teach you how to study it, how to be able to go back. And guys, hoping there's at least a couple of you new guys in here saying, man, this guy's full of beans. No way. I don't believe it. 70, 80%. I'm going to prove them wrong. And I encourage you to prove me wrong. I encourage you to do that work, to dig in, to take this study tool and tell me Monday morning that you spent 10 days looking at this setup with the rules met, and I'm full of beans. Because if you work that hard, you're going to understand this trade in a matter of days, and you'll be with us forever, and I'll be excited. So, high probability trend trades, guys. It's only 3 rules. We're going to embrace simplicity. It's only 3 rules, and those 3 rules happen on 2 charts. We're going to keep it simple at first, right? High probability. So, always going to start on the 13.2. We're going to use the most current bar. So as the market is trending, trading, these price bars are forming and building, I'm going to look at the background of my 13.2, and it's either going to be red or green. And I'm going to be able to identify the overall trend of the market instantly. If it's green, we're in an uptrend. If it's red, we're in a downtrend. Not fighting the trend is going to prove to be advantageous initially. It's going to keep you on the right side of things. One of my favorite stories, it's Friday, we're going to have story day a little bit now and then, is John Novak had a broker that he knew that he was talking to. And the broker told him, he goes, hey, Mr. Novak, I can guarantee you $1 million in your account by the end of the year. It's a pretty simple process. To which John replied, that sounds amazing. How do I do it? And the broker got this silly little smile and he said, you know what? I need you to fund an account with about $3 million, and I want you to fight the trend every chance you get. You should be down to $1 million by the end of the year. But it's silly. It's a silly little story. It is a true story. But guys, let that silly story be a reminder. The trend is your friend, and we're going to focus on that high probability trade that goes with the trend. Also on the 13.2, our first 2 rules out of 3 for a high probability trend trade happen on your 13.2 chart. They must be true, they must be met, and if they're not, we're not even going to take the time, waste our energy looking for an entry, because the 13.2 is a broad stroke of a brush. It's this overall temperature of what the market is doing, and we're going to be able to take those advantages from rules 1 and 2. We're going to be able to take the advantage of trading with the trend, and when they're met, we're going to use a smaller, faster chart, a 5-1 chart, where we may get 20 or 30 bars on a 5-1 inside of just one of these bars on a 13.2. So we're going to be able to refine that broad stroke of a brush. We're going to be able to recognize that area where the market is likely to continue. And we're going to use rule number 3 to enter the market at that spot. And by doing so, we're going to be able to reduce risk, and we're also going to be able to maximize our profit potential. And guys, excuse me 1 second. I forgot to put one picture up for you guys. I have taken a picture. We'll go back to the editor. Maybe I have it over here in a file. Of the 3 rules. There we go. And I've consolidated them down into the most simplistic form. 3 rules providing 3 very definite advantages. And remember that, your rules provide advantages. Rule number 1 on the 13.2 chart says that I have to have strong triggers. And then I've corresponded here. Those strong triggers are going to give me the advantage of momentum. Rule number 2 on the 13.2 chart says no termination conditions. Rule number 2 gives me the advantage of a clear path, of nothing in my way as I'm going. Rule number 3 says to use a limit order to buy or sell a pullback at an area inside of favorable large triggers on that 5-1 chart. And rule number 3 gives me the advantage of an entry where the market is likely to continue. Guys, you're going to be able to put these 3 rules together by using 2 charts. And then I'm going to go out on a limb here. I'm going to click on Gary's link. And you're going to be able to identify whether or not the advantages are had. So you're going to be able to identify those through your understanding of the rules, the 3 rules. So let's go through those and make sure. And then we'll go through and we'll police ourselves, guys. We're going to look at everything that you guys post. We're going to look at the live market. And we're going to play a simple game of yes or no. Did I have the strong trigger look? Well, in an uptrend, strong triggers mean that the smalls are above the large are wide, they're angled in the direction of the trend. There is space created between small and large, guys. Space created. In the downtrend, the larger down, the smaller below. The space created between the large and the small lets me know that the odds are favorable for the market to continue up. Guys, my favorite phrase when I'm getting ready to get into a trade is odds favorable momentum. And every now and then we'll just call it the old OFM so we don't have to type out so much. Feel free to put that on your chart when you're writing rule number 1. This advantage of momentum is what you're going to stick to for the first 30 days, because as those trigger lines return to and break their way inside of those large trigger lines, it's a weakening. And that weakening lets me know that anything can happen up or down. So if your trades have that odds favorable momentum, then you're taking that advantage going into the trade. If you have anything can happen triggers, you've made a choice to forfeit your advantage of momentum. And that's how I like to think about it. This is what it does for me. It lets me know that the market is likely to continue all the way to here, where it tells me that anything can happen. So we're going to look for opportunities in that odds favorable momentum. And guys, on a 13-2 chart, you're going to be able to scroll back. You guys that are going to prove me wrong this weekend, you're going to be able to scroll back on a 13-2 chart, and every time you see odds favorable momentum, if you see one of these tails, one of these wicks, I want you to circle it, because this is a potential entry on the 5-1, and we're going to put it all together so that you can do that study today. So in an uptrend, it's not from the start of the trend, it's not to the end of the trend, it's that best of the best right in the middle. Same thing on a downtrend. Whoops, my mouse is scrolling fast today. It's not at the start of the downtrend, it's when the triggers accelerate away, looking for opportunities for potential entries, right up into the point where we give that advantage away when we get back to anything can happen. So guys, I'm going to ask, I know I've got new people in here. I know I've got old people coming back, getting smarter and smarter. Give me a big old capital Y in the room if you're with me. You're with me on the idea. Odds favorable momentum, looking for that strong trigger look, insisting on the advantage of momentum, and being able to recognize it. Looking through, let's see where we're at, guys. I got all the old timers. I've got all the owners telling me, absolutely, Mark, I'm there. Nazzle 333, how do you feel about it? Elvis, you understand the advantages. Safia, triple Y, I love it. Guys, if you're brand new in this room, 30 days today, you're doing amazing. 30 days in, I love it. Guys, keep giving me those Ys. Let me know that you know. And if it's a no, you ready? If it's a capital N instead of that Y, let me know, man. We'll talk about it again. Nazzle, welcome to Nexgen. Welcome to the room. It's great to have you. I want you to know that this is your class. So if you have anything at all that you want to talk about, let me know. I got you. When we have that advantage of momentum, guys, when we have odds favorable, rule number 2 says no termination conditions, guys, because we're not willing to give away the advantage of a clear path. A termination condition is a Fibonacci-based indicator. That's a big word, but it's pretty simple. And it may reverse the market based on a comparison of the triggers in the area. It's a powerful word, may. It means that it's not necessarily true, but I'm going to teach you guys how to identify when that clear path goes away. The areas that we're going to identify on the 13-2 are going to be blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1 dots, magenta divergence high line, cyan divergence low line, or that large chart mid band, if the large triggers are a full bar away. And guys, I want to share my favorite picture real quick. It's even saved in here. Your first 3 days, Nazzle, are going to feel like this. I want to brace you for it. I try to keep it very simple. It's going to feel like this a little bit. By day 3, and guys, back me up on this one, by day 3, you're going to start recognizing these things. If you really focus on keeping it simple, you're going to understand what you're looking at, and you're going to understand that I'm here to help you look at it. So all these areas may reverse the market. It's a simple comparison, guys. It's a comparison of price reaching the area and where the trigger lines are. So the first thing that has to happen is all this market price is coming down, these price bars, and they reach support. They reach Fibonacci support. Your job is to ask yourself, where are the trigger lines? And if none of the trigger lines are below support, don't take any trades into the area, guys. You've reached a termination condition. It's an area likely to stop the market. You'll see it up top as well. Price reaches the support up here. None of the trigger lines break through. Once again, no short trades into the area. The rules even say, the definition says that it may reverse the market, right? It didn't here. There's odds favorable momentum going into it, and the area ultimately broke. So the rules also say, let the area break before trading in the direction of the trend. This area of support is broken when both the small and the large get to the other side of it. Support begins to act as resistance. And now once again, there is an advantage of a clear path to get us to that next key Fibonacci area. So price reaches, no triggers through, no trade. Rule number 2 is not met. You've reached a termination condition. Both sets of triggers break through. You start the process over. If I have odds favorable momentum, now I have a clear path. I can look for an entry for a high probability trend trade. And then there's one other look, guys. I told you, you're going to start on high probability. You're going to end up taking a lot of medium probability trades. And the first medium probability trade that you're going to take, more than likely, is what we call a 50-50 trade. And it doesn't mean that it's got a 50-50 chance of winning, because in my opinion, those are horrible odds. I don't care for them. What it means is that you've reached this key area and your small triggers have broken through. And guys, this is so important. Small have broken through with odds favorable momentum. And that's the one part that gets guys. They're like, well, they both went through, or the small went through. The small go through with odds favorable momentum present, but the large remain above the area. This is an area, let's do some typing now. I'm going to give you guys this picture. This is a 50-50 look. This is an area with the potential to break, but has not broken, which means that you do not have the advantage of a clear path, but you have the semi-advantage of a freight train's worth of momentum that's already partially broken through an area. You're going to see these setups, and there's going to be a way to take them that isn't as aggressive, that offers more success. And when we talk about the perfect entry, we're going to look at that when we get into entries. So I'm going to ask first, though. Simple 2-part process. Price reaches the area, where are your triggers? 0 triggers through, 0 chance. Don't take the trade. Rule number 2 is not met. All of your trigger lines through. Support acts as resistance. Resistance acts as support. If the rules are met, take a trade. 1 trigger line through, 1 set of triggers, both lines of the small triggers with odds favorable momentum. There may be an opportunity, but we want it to be perfect, guys. You with me so far? And these termination conditions happen all day. Price reaches resistance. No trigger lines through. Awesome, Rob. No longs. Price reaches support. No trigger lines through. No shorts. 90% of what we do is going to be chart reading. And then price comes up. Resistance. Divergence high. Resistance. None of those trigger lines break through. Guys, this is the Mac Daddy of all termination conditions. This is what we call a pivot stop out, and it's right at a key Fibonacci area, and it just means that price exceeds this divergence high and then trades back below. And this termination condition gives us a full reversal and odds favorable momentum. And this is your best of the best trade from what we call a strong top, a termination that creates a full reversal that gives us odds favorable momentum. This is what we call a strong bottom, guys. These termination conditions that create the full reversal, if you remember, this is your best of the best chance for the first 30 days because this is the one that typically wins 70 to 80% of the time. This is the one that gives you all the advantages, nothing in the way. Everything says you are more likely to win this trade than to lose. Let that memory of success create confidence. Let that confidence carry you through study. Rule number 1 says odds favorable, right? Everything has to be screaming. We've got it. But it screams right into one-to-ones. None of the trigger lines go through. No matter what the momentum, if no trigger lines are through, it's a no trade scenario for new users. It may be a take a chance later down the line, but for new users, it's a no trade scenario. Sometimes the market is going to turn from seemingly nowhere. Everything's going to be going down. Areas will be cleared, and then it just changes direction. Well, I don't control the market and you don't control the market, but we can identify this change on the 13.2. Remember, 1 bar event. We can see that change on a smaller, faster chart. If we go to our 5-1 chart, we can recognize through 3 divergence in the same price range that the trend may be terminating, that we may be coming to a turning point. So as the market comes down, divergence lets me know there's a loss of momentum. If I see it 3 times, don't take any more shorts. It's a termination condition on that smaller chart. The only termination condition that we'll look for on a smaller chart. If my trigger lines go from odds favorable to anything can happen, those small trigger lines work their way inside of the large. Once again, we're forfeiting the advantage of momentum. Brand new users, no more trades. And then if that third pivot is higher than the previous from a low, or lower than the previous from a high, once again, it's adding fuel to the fire here. We have a head and shoulders pattern. We have it with a visually easy to read loss of momentum. Don't go short anymore. You'll see it from lows and you'll see it from highs. And it's typically going to help identify these turns when the market doesn't quite make it to a key area. And if you see it on a higher time frame, you can typically expect larger moves. If you see it on a 13.2, a 21.3, 34.5, guys, there's a million time frames. But we're going to focus on 2 initially. We're going to identify momentum, right? When we have momentum, we're going to make sure that we have a clear path. And when we have a clear path, guys, this is my favorite. Rule number 3 on the 5-1. We're going to pinpoint that area of entry. And our rules say we are going to use a limit order, which means that the market's going to come to us. We're not going to go to the market. We're going to let it come to us. We're going to use a limit order to buy or sell a pullback. And a pullback is a small retracement in price counter to the underlying trend. Meaning that if the market is trending up on the 13.2, if the momentum is up on the 13.2, if there's nothing in the way on the 13.2, guys, we're going to ask the 5-1 to pull back, to go down just a little bit, to get us to an area inside of favorable large triggers so that we can enter that trade where the market is likely to continue. So during the live market, this will be the look of the 5-1 chart when the 13.2 rules are met. The triggers are strong. And this is when you're going to start looking for an entry. Rules met, let's refine. You're going to focus your attention on the 5-1 large triggers, and if they're up and strong, and they're at one of those three areas, Fibonacci support or resistance, mid bands or one-to-ones, this becomes your area to watch for entry. The rules say we're going to buy a pullback in this uptrend. So that pullback starts with a reversal bar. That reversal bar lets me know that there may be that small retracement. So I need to create my window of opportunity. That window of opportunity is from the highest point of support, here you see the mid-band, to the lowest point of support, one-to-ones, that are going to be inside of those favorable large triggers. Guys, you have identified probably 7 or 8 bars before the market even gets there where the market is likely to continue. Because of the advantages present, because of your window of opportunity, you're going to right-click on your chart and you're going to activate your limit order, and then you are absolutely powerless until the market pulls back and fills you. You can't make it pull back. You can't wish it to pull back. You can't hope it or miracle it down to your entry. It's either going to get there or it's not. But if it does come back to that window, you're long at 79.21. You are in a long trade with the advantage of momentum, the advantage of a clear path, and the advantage of having entered where the market is likely to continue, guys. Your initial stop when trading futures, 12 to 14 ticks. It's going to go down here where the market shouldn't go, below that window of opportunity. And guys, when I tell you I'll take this trade 1,000 out of 1,000 times, you have to believe me, because 70 to 80% of the time, this is my result. This is where I'm at. Profit target reached. As the market continues in the direction of my trade, I'll reduce my risk below that reversal bar. And guys, I'm going to take this trade every time. Every time it presents itself. And I'm going to study it and I'm going to build trust in it. And guys, I'm going to commit 30 days to this look, making sure that I can identify rules being met on the 13.2 and my entry on the 5.1. Guys, this picture is going to be how to study. As you go back and you study these looks and you see the opportunities that present themselves and you're trying to recognize that best of the best, you'll be able to identify on a 13.2 chart the odds favorable momentum. You'll be able to identify on a 13.2 chart that we haven't reached an area. And then remember those tails. If I circle a tail on the 13.2 chart or square a tail here, if it is in fact a high probability trend trade setup, that square is going to circle, it's going to surround areas of support inside of favorable large triggers. It's going to surround areas of resistance inside of favorable large triggers. Give me a Y in the room if you're with me. Rules 1 and 2 are met. We can identify where the market's likely to continue through areas inside of those favorable large triggers, guys. It's a recipe that takes some practice, it takes some study, but it's going to get you to where you want to be if you really focus on this one for the first 30 days. And we talked about that first medium probability trade, right? That one where the large triggers haven't completely gotten through that area. They're almost there. The momentum is strong. Everything looks like it has the potential to break, right? Here's the same picture of your perfect entry. No divergence, no slowdown on that 5.1. And look at the trigger lines on your 5.1. Odds favorable momentum, just like we have odds favorable momentum on the 13.2. Guys, your trading is worth the absolute best look. This is it. You'll also notice that there's a small window of opportunity. Your areas of support are stacked one on top of the other. They fall right inside of that window. This is your best of the best look. No matter which trend trade you're taking, this is the one that has the highest success rate. And if you study this one for 30 days, if you commit to it for 30 days, it's going to teach you to read your indicators. Once you can read your indicators, your possibilities with Nexgen become limitless. You'll work your way into medium probability trades. And these are defined as when most indicators line up for a trade. However, a small issue exists. Your ability to read your charts is going to have you identifying that small issue. This will be the vast majority of your trades. Most of what you do may have a small issue, and you'll be able to execute these aggressively, assertively. If there's trouble in your way, your chart reading will allow you to recognize that trouble. You can take off a portion of your profits at that trouble spot, and you can reduce risk to a zero loss level. You're going to see more medium probability trades than high probability trades. Understand that as you take your first 30 days. Understand that as you're sitting there going, this isn't the most exciting. I keep waiting and it hasn't set up. Go back and study. Use market replay. You can accelerate it. How do you get 30 days? How do I get 30 days worth of experience in 15 days? Market replay, guys. Trade the day live, go back and replay the day. At the end of the week, replay every day. Get those repetitions in, get those chart building skills up, and then you'll be able to just kind of come through and recognize an awful lot. And let's study real quick. This is the S&P today. Let's see what we see. Price reaches an area of resistance. Absolutely no trigger lines go through. Guys, which rule has not been met here? Is it the rule of momentum, the rule of a clear path, or an entry inside of favorable large triggers? Guys, what do you think? Should we be taking long trades into this area that none of my trigger lines are broken? Going to be the shy class today. That's okay. It's a termination condition. Absolute textbook. There you go. Thank you. As I scroll back, there's one of those tails at the tail end of momentum, right? Price accelerated away from the large triggers. There's another one of those tails on a 50-50. The smaller through, the larger not. There's another tail as it continues up. 3 potential opportunities for a high probability trend trade over the course of 6 minutes. Price comes down, reaches support, no triggers go through, no more short trades. Guys, look what happened after that. This is why we don't trade into termination conditions. And I'm just scrolling back. Smalls are through, larger not, 50-50 opportunity. And guys, there's my tail. Give me a Y in the room if you're with me. This is how you're going to study the tale of 2 trades. I see what you did there. Not too difficult, right? Not too time consuming. But what are we doing? We're recognizing, probably first and foremost, that I don't have high probability trend trade opportunities every second of the market. I'm going to have to be patient a little bit. But if I'm patient, they typically present themselves, right? And when they present themselves, I can scroll back, I can circle, I can study. Guys, this is a termination condition that creates a full reversal that gives me odds favorable momentum. I can't wait to see what happened there. And this was during news, but what you'll find during news, even when the market is going absolutely Mach 10, let's see if any of the patterns ended up working out. It was too fast to trade, guys. All of this happened over a matter of seconds. But it sure looks like there was a lot of what could be textbook setups. And we're going to go study them real quick, and we're going to go back, and then, guys, we're going to do a bar by bar. I'm going to stop there. That's a lot of circles going to 8:30. So let's fast forward, and let's find our first circle. And our first circle was at 9:32. So I'm going to scroll my 5-1 chart over to 9:32. And let's see what I see. We're at the tail end of that odds favorable momentum. And I get a pullback directly to support inside of favorable large triggers. The market bounces up almost 3 points. And then it pulls back down. And then it continues up. Guys, this may be an opportunity for smaller profits, a little bit of a management opportunity. but certainly fits the rules for entry. And that's all we're studying right now, rules for entry. Here's my next one. The tiny circle is a pullback to support inside of favorable large triggers. The circle right before it is a pullback to support right inside of favorable large triggers. Do you see it? Guys, this is your best of the best setup. Commit to it. There's one during at the tail end of news. All we're doing is pattern recognition. All we're doing is understanding whether or not we had an advantage, guys. That's a pretty ugly setup there. And probably in the live market, the small triggers weren't through yet, but it still pulls right back to an area of resistance inside of small triggers. It still doesn't get outside of that window of opportunity, and it still continues down with the momentum. This is where trust pays dividends. If you took the first entry, which is beautiful, no divergence, smalls outside, in at 41.47, the market comes all the way down to 41.42 before it makes a significant bounce. Most new traders will already have profits in the bank and then making a decision on the second trade. This weekend, I want you to go through and I want you to study these looks. First pullback comes right to resistance inside of favorable large triggers, and then it pushes up just a little bit higher, remains in that window of opportunity, continues down. Remember, all we're looking for is entries. All we're doing is refining our ability. You guys let me miss one. We're refining our ability to recognize the conditions that give us an opportunity. Another one, and another one, and over again, guys. Can you do this if you're brand new? Can you go back this weekend? Because your software goes back 10 days. You can take 10 days worth of market and look for these rules to be met, to build that confidence, to build that understanding, to be able to identify termination conditions, and even more so, to identify when termination conditions break. What do your trigger lines look like when those areas ultimately break? All you're doing is creating the ability to read charts. Just creating the ability to understand when the advantages are present, guys. All right, so that's the first hour. You guys made it through, right? Nice job. I'm going to leave you with the S&P. There is high impact news coming in 3 minutes. I will be back in just a second. You didn't get filled at 7:30. You didn't place the order between the large triggers. Nice, Rob. When I come back, and that is, Rob, why the rules and writing them down and understanding them are so important, because you just policed yourself, didn't you? Nice job. And we're going to teach you guys how to do that. We're going to teach you how to use a checklist to make sure that you have the best of the best. We're going to write a plan, a simple plan I'm going to give you guys to go into the weekend so that you can take crayon to paper and write your own version of it and personalize it. And then we're going to start looking at your charts. Everything that you guys have done today, we're going to talk about it. We're going to get feedback. If you're brand new, just because it's Jose's chart doesn't mean you can't ask a question. Just because it's NG Times chart doesn't mean that you can't make an observation, ask a question. This classroom is for everybody. It's for everybody to learn at every different level and every different pace. It's kind of like I'd rather have the smallest house in the best neighborhood. I'd rather stop and cover something for an hour and make sure that the newest of the new person has clarity, rather than trying to speed up and cater to the people that have been here for 3 months that aren't asking questions. So get those questions in there. I'll be back in about 5. Guys, fireworks should start in about a minute. Remember, news right now. Be safe. Jerry's still learning after 8 years. You'll be learning for the rest of your life, I think. Back in a minute, guys. Let's see if news moves the market. break. Water glass is full. You know, there's a termination condition that shows up in the manual that we didn't see a picture of, and I want to show it to you because it just happened. And it's the large chart mid-band. If the large triggers are 1 full bar away or greater than a full bar away. Whoops. This is what we call the gap theory, guys. This is a pattern that isn't necessarily used to get you into the market, but it can be a pattern that keeps you from taking trades that you shouldn't be in. And if price pulls away from the triggers too fast, too far, smack dab into a Fibonacci area, whether it's support, resistance, typically a mid-band, it's going to snap back to the triggers. So we just saw this on the S&P. Price came from a termination condition, right? Right into the mid-band. The small triggers were above that area. It looked like there was odds favorable momentum. But do you guys notice that the large triggers didn't follow? The large triggers, there was room to get a full reversal bar all the way back to those large triggers. And I knew that there was room, and I missed the picture by a half a second. Because this white reversal bar marker, that point where this bar becomes a reversal bar, my large triggers were below that reversal bar marker. Lets me know no long trades because price is likely going to snap back and close that gap. So let me annotate this for you. Mid-band hit, triggers full bar away, below reversal marker, and of course, guys, if we're going the other direction, it's going to be above. No longs in that vacuum. It acts like a vacuum. It literally sucks price right back to those large triggers. So guys, I'm going to give you this picture, and I want you to follow along with me. If you've never used your spreadsheet, if you haven't filled up your spreadsheet yet, I want you to share that picture to screencast. I want you to upload it, and I want you to get yourself a screencast link. And then once you get that link, I want you to pull up your spreadsheet, okay? And under chart reading things, I want you to right click and paste. Go to the insert tab. Go to the link tab, okay? This is something that you're going to study over and over and create recognition. I'm going to paste that picture link. Guys, I'm going to label this gap theory. And now I have a picture of gap theory. And then I have another one from maybe earlier in the week. And it's that same pattern going the other direction. Guys, this is a great awareness tool. And what you're going to find is that when you begin to recognize that those large triggers haven't followed, you're going to keep yourself out of an awful lot of trades that look like they should have won. But because of that vacuum, because of that gap, they didn't. All right. So we're going to do 2 more things real quick. And then we're going to start just looking at charts and market, guys. Charts and market. New users, this is an example of how to write a plan. How to just give yourself a very clear set of rules for what it's going to take to get you into the market. All you're doing is defining your entry. All you're doing is defining where you're going to put a limit order and what conditions have to be met for you to put that limit order in. I want you to personalize it. I want you to use possessive words. This is my plan, and my trade is a high probability trend trade, right? Because I've committed for 30 days to learning to read my charts. In order to enter this trade, I must have the conditions of this checklist met. Guys, I just put both of my high probability trend shade checklists in the market are in the classroom for you. The first one is nothing more than the rules written out. Print this out, put it on your desktop, police yourself every time. If you have Snagit, take a picture of it so that you can post it onto your chart. The second one that I put in there is the exact same checklist, but I've given you pictures from the manual. So if you're brand new and you're studying this trade, put this one, save it to a file somewhere. This is every rule, and then straight from the manual what that rule looks like when it's true. So those are my gifts to you going into the weekend. All we've done is define an entry that gives us a probability of 70 to 80% winners. If I check yes on every one of these things, I'm in a good position. Is the market coming from a good top or bottom? Guys, this is the only thing on the checklist that doesn't have to be a yes. It's going to increase your likelihood of success, but it's not mandatory. That's the only one on the checklist that can have a no. If you have a no on any of these, you have to adopt the mindset right now that there's only two things that can happen in the market. You don't control anything other than this scenario. Either your rules are met or your rules are not met, and there's only one of those that will get you into a trade. As you take pictures of that perfect trade, put a couple of them in your plan so you know exactly what it is that you're looking for. If I look at the perfect trade here, right from my plan, this is a chart that has the spreadsheet attached to it, or the checklist attached to it. It has the rules written. Rule number 1, yes. Rule number 2, yes. Termination conditions, none. Pull back to the area inside the midband. This is a beautifully annotated chart. Rules met, 100%, profits made. That goes into my plan because that is exactly what I want to recreate. Guys, this entire plan, to write it out, is about a quarter sheet of a paper. Keep it simple. Don't create 10 checklists. Don't create 50 rules that have to be met. Take this very simple approach, 2 charts, 3 rules, a 4-part checklist, and guys, commit for 30 days. As you grow into those medium probability trades, you're going to add to your plan. Well, now I'm taking that 50-50 trade, but if I'm taking the 50-50 trade, I don't want divergence on my 5-1. I don't want that slowdown on an area that only has the potential to break. I want my small triggers outside of the large. I want that odds favorable momentum. And anytime you add or change, take pictures to support exactly what your plan says. On a 50-50, when the smalls break but the large don't, my entry must have no divergence, my trigger lines must be strong, and I'll take the perfect entry. If divergence prints, it's no longer my trade. It becomes rules not met. So I'm not taking the entry, and there's a reason, because the rules are designed to create an advantage. You'll notice when the divergences print, the market ultimately reverses. There's a reason that this is written into this very conservative approach to entering the market. And guys, that's the first step, is identifying entries. The one that's going to yield the biggest results over time is learning how to manage, using your chart reading and learning how to manage the charts. Your first 30 days are dedicated to entries. Your first 30 days are dedicated to learning to read your charts. So you can use a very mechanical, a very methodical management plan. Trade 2 contracts. Your initial stop will be 12 ticks. Input it into your NinjaTrader ATM, and it'll be moved above or below the window of opportunity, that area where the market shouldn't go. When a reversal bar goes in the direction of your trade, you can reduce your risk 2 ticks above or below. Take profits at 100 on the first, 200 on the second. When the first is reached, go break even. Guys, there's zero room for opinion or emotion or anything in this management plan. It's very easy to follow. It's very black and white. There's no opinion space. And this management plan is going to get you stopped out break even on a lot of second contracts. But what's going to happen is if you've taken the perfect entry, you've taken a picture. When you've taken the picture, you've put it into your spreadsheet. And now you can take that same picture and you can start another set of annotation. When the small triggers are below the large triggers are wide and angled in the direction of the trend, and there's nothing in the way. It says, let that last contract run. I'm developing a management plan based on my ability to enter the trade in the right spot. So guys, give me a Y in the room if you're with me. This weekend, if you're brand new, I want you to practice writing an example plan, okay? I want you to practice writing what it's going to take to get you in. Even more so, guys, just steal mine. It's okay. Steal the one that I just gave you. Let me give it to you again right here in class. Steal it, put your name on it. You won't be docked points for plagiarism. I want you to plagiarize. I want you to embrace that like it's your own. 30 days, guys, that example plan going through, working on management, working on the perfect entries. Take pictures, take lots of pictures, post them in class. And every time you post in class, let's have a conversation about what you're doing. And we're going to start that right now. I'm going to scroll up and we're going to take a look and see what's been going on this morning. I think I have a couple charts up here. Ron C got us going this morning. And I like this because it just kind of exemplifies that everybody's trades won't be the same, guys. You buy a new car, 5 of you get a Corvette, 5 of you are going to drive it differently. 5 of you get a new golf club, 5 of you are going to hit it differently. If I hand each of you a pen and say draw a dog, you're all going to draw it differently. Ron relies on odds favorable momentum coming from a termination condition. Guys, this is the biggest advantage that you can have. Everything says down. Everything's in a clear path. He caught the news. He took that momentum and just let it carry him down to a potential turning point. It's a different approach. But his trade doesn't have to be my trade. Ron has posted the same trade in this class for the last 3 months. The exact same look, 100% consistent, entries, exits, and he's finding a great deal of success with it. He's taken the software and made it his. Gary has a termination condition that's creating a full reversal, and I like it. Guys, this isn't a trade. This is just chart reading. He's recognizing a couple different things. Price reaches a midband and resistance. The large triggers don't follow. He's not looking for a long trade because he's in that vacuum. The market heads back up. There's that third divergence in the same general location, but he's waiting for his trigger lines to get through the trouble spot. He's watching the market consolidate in this area, and he's waiting for his rules to be true before he pulls the trigger. Guys, take as many of these pictures as you can. When your rules aren't met, take a picture and talk about why. That's the same picture. Because what happens is you start reinforcing the rules a little bit. Dimitri, have an awesome weekend. Thanks for being here. Ron, you're different. Ron, I really enjoy showing your pictures because I think that there's so much that can be done with Nexgen. You just have to figure out what it is that works best for you. All right, Gary, we had a 50-50, right? Small's below the large are wide. They're angled in the direction of the trend. This is an area with the potential to break. There is no divergence and strong triggers. I would say that an entry inside of favorable large triggers would be great. You say it's not needed. Gary, I think that could have been a trade without the signal, and then maybe with divergence, you wait for the signal. Either way, could have been in. Profits. Nice trade. Good read. Jose, same trade, right? Odds favorable, small through, larger almost through, no divergence, strong triggers. Notice that he annotates everything. He gets in on a medium probability trade, manages it assertively, And then when the divergences begin to print and it can't break, he takes his next exit, does not lose money. Jose, perfect execution on a 50-50 trade. Dave B. Let's see where we're at. Can I make that bigger? Nope. Okay. There we go. You say, is the market coming from a good top or bottom? No, remember, not mandatory, but still it's helpful. Odds favorable momentum on the 13-2. We don't. We've got flat triggers, right? No termination conditions. Dave, you've identified that it's directly into a termination condition. At this point, it's not a high probability trend trade. At this point, you're making the decision to break your rules. You break your rules from resistance and you take quick profits, and it looks like it just kind of shuffles a little bit, right? Does that make sense, guys? I'm not knocking Dave's trade. Dave's trade it's his and his alone. But he sure did make a decision to trade directly into an area likely to stop the market. He willfully and knowingly gave away his advantage of a clear path. That's okay. Because when he did, right, he managed assertively. He said, I've got momentum down, but I'm into a brick wall. I'm going to take quick profits. I'm going to get out and I'm going to wait for the next best shot. Dave, great execution on what's not a high probability trend trade. And guys, I will never give you grief for taking a trade outside of those basic rules. But I love that you put why you get in. It makes sense. And then Gary, we got a couple things going on here, right? And I like that there's no trade. Not only are we weakening, they're coming back, but we're directly into a fib with absolutely no trigger lines through. Termination condition, textbook 100%. Even your 5-1 has no triggers through. Just kind of confirming. Even your 8 range has no triggers through. Absolutely no clear path there. And I believe that's the same look. Triggers breaking fib, but not 1-to-1s. Trend could stop the trend. Termination condition could stop the trend, but 21-3 showing great downtrend. No divergence, and it stops you right out. Termination conditions. Guys, I love the ability to use a 21-3. Jose, are you with me? I want to talk about using higher charts for a second. Hey, Cernivus, nice to have you. Great test. So let's go through. When we talked about using 2 charts, talked about the 5-1 and the 13-2, right? Coming through, finding the advantages and working over. I love it. Guys, as you grow with the software and your understanding increases, you're going to be able to recognize, you'll be able to use higher time frames. You'll be able to use different charts to help you create advantages. And Jose, you said that the 21-3 is showing great downtrend, right? You've got smalls below the larger wide, they're angled down. I don't disagree with the momentum on the 13-2 or on the 21-3. And Jose, this is where I had to have a little bit of mind shift in my own trading. Do you recognize that this is a 50-50 on the 21-3? So if I have a 50-50 on the 13-2, don't I insist that the conditions need to be great on my 5-1? And this is not just for you, Jose. This is for everybody. But it took me a long time to go through this. So if this is 50-50, I want this to be perfect. So now I've got a termination condition and a 50-50 going into a 50-50. So I'm kind of that trickle down. It goes through. If this was odds favorable, I would have a better chance with that look on the 21-3. I like that picture, Jose. I like the post. But I think that there's some great information as people begin to add those next level charts. Sometimes too much information is too much information. And sometimes it really can create a little bit of advantage for you. Nice picture, Jose. And then everything just gets easy, right? Great termination conditions, odds favorable momentum. Look at that look on those trigger lines, guys. Holy smokes. Now that 21 confirms as well. You took the first momentum entry, made some money, and you said, but you know what? The ride's not over. My rules are met. You get in just above the window, but your stop is great. Profits directly into the pivot stop out. And then you let it get you after that. Jose, the entry at the area inside of favorable large triggers would have kept you in this trade for break even and profits all the way up. Do you see it? If you had gotten in at the mid band that was inside of those favorable large triggers, you could have been break even after the first profits. And man, you would have been laughing all the way to the bank. Great trade. Great trade. Gary, before I do, let me give you, go to Discord. Just so you know where to find the answers, guys. Under the trading rules, you will see the momentum rules in there, and we'll talk about it for sure. I'm going to get through the charts first. I want to get through the pictures that people are showing, and then we'll put momentum trades on the list of stuff to talk about. But you can find it and start kind of looking at it if you want in Discord, and then we can talk about if you have any specific questions. But I'm more than happy to go after it. It's a trade that it's the first shot to get in after a great termination condition. Let me figure out where I am. Guys, you're doing a great job posting pictures. I appreciate it. I got lost for a second. There we go, Jose. Dave B, let's see what you did. And for those of you that are new, this is what we do every day. We talk about rules, we reinforce rules, identify advantages. Dave B, picture perfect in at the mid band, right? First target, probably break even. Second target, way up here. Third target after divergence, you let it take you out. What a great trade. Dave B, picture perfect. Guys, steal that one for your checklist. Then Jose, anything can happen, triggers, breaking 1-to-1s. You do take an entry below everything, no momentum. And Jose, that's great use of the 21, right? That 21 has an absolutely clear path, 100% odds favorable. And that helps you make a good decision. I think that maybe a little early, and then there's your second shot that gives you a better chance when the smalls begin to work above the large, but great stop placement. Jose, that's perfect usage of that higher time frame. Odds favorable, nothing in the way. You're just using a smaller chart to recognize your entries. Great job. Jose, you're busy today. Odds favorable, no termination conditions. Area for entry inside of favorable large triggers. And look at the result. Jose, can I ask you, would you take this trade again if it presented itself? And this is for everybody. Would you guys take this trade again? Smalls above the large are wide, they're angled in the direction of the trend. There's absolutely nothing in the way. Are you guys with me on where I'm going with this? Odds favorable, zero termination conditions, area for entry. Guys, he lost money on this one. Why? What did he do wrong? Because a lot of times, if you lose a trade, you think you did something wrong. NG, thank you for that. anything that wins 70% of the time, whoops, I missed my percent, is mathematically, I've got drunk fingers this morning, sorry, is mathematically obligated, I misspelled, to lose 30% of the time. Does that make sense to everybody? Do you know that you don't control the market? Do you understand that you don't have control over whether it goes up or down? You don't have control over the outcome of your trade. The only thing that you have control over is whether your rules were met or they were not. And if your rules have been studied and practiced and simulated and tested and verified to win more than they lose, then we don't worry about one trade that doesn't win, guys. Use a sample. 20 to 25 trades. Where are you at after 20 to 25 trades, guys? I haven't had anybody trade this checklist religiously, exclusively, that didn't find themselves in 80% or better. Which means that even with the absolute perfect conservative plan, they're still taking losers. Get yourself mentally ready for that. Get yourself financially ready if you're going into the market. You will not win every trade, but you will develop trust in the rules, so much so that you'll take it every time it sets up. NG, beautiful. Odds favorable momentum, no termination conditions. What a great entry inside of favorable large triggers. Beautiful exit. NG, absolute textbook. Don't call the cops, but I need to put this one into my spreadsheet because I want to be able to do what you did here. I want to be able to take that same trade. I want to go back and study it, create recognition, and make sure that I can always do exactly what you do. Andy Trader, taking a momentum style, letting it clear a little bit, maybe a little aggressive as you get in. You hit all these areas, take an exit, and then you catch that 50-50 beautiful entry on the second one. Taking a little shot at the first when it clears. I like it, Andy. I see what you did there. If you're going to be aggressive with momentum, maybe be a little aggressive with entries when you reach those best of the best spots. And then that patience, then you just wait for the perfect trend trade and come down. Nice job. Great trading. I am not opposed to this trade at all, and I'm really starting to recognize it a lot more thanks to a couple of these next-gen traders. But the one thing they do is they make sure that they have a path clear enough to catch at least $100. So on the S&P, looking for 2 points, going from 57.50 to 55.50, and that still has you out before you reach that trouble spot. And that's just kind of using what other people are doing. That's not a trade that I take. But with all that momentum, I like it. Nice job, man. Thank you for sharing that one. I love seeing different approaches. Everybody does their own thing, right? Jose, maybe not a great bottom. It did reach that key area, termination condition, full reversal. Everything agrees. Every chart says up. You get in at the mid band inside of favorable large triggers. Little bit before odds favorable, but really close. I like it. Way to take advantage and way to manage aggressively. Nice trade, Jose. John C., good to see you back in the room. Let's see what you're up to today. John C. says termination condition. Price accelerates away from the large triggers. He says, I'm not getting caught in a vacuum. I'm a great student. Price comes all the way back to 53.75. All three trigger lines say up. And you just take the opportunity. Beautiful trading. Absolutely beautiful trading. recognizing that this is an area likely to stop the market, letting it retest, let every trigger line agree, take a little stab back to the area and go. Man, great execution. Rob, easy answer on that one. Good morning, Ed S. It doesn't matter what the number is. It's the comical way that John explained it to me is that it's like being pregnant. You either are or you are not. Don't worry about the degrees. There's mathematical stuff in there, but it simply means that there's that divergence between the two, between momentum and price. Because I did the same thing. I started getting hung up on numbers, but what you'll notice is that they fluctuate all through the process before they print. It just is. The second that number prints and the second that line hits, then I have a verifiable slowdown of momentum. Great question, though, because everybody wonders it. Safia. Oh, you're making me proud. You just hit 30 days. You're putting a checklist on everything that you do. You're recognizing great tops. You're recognizing odds favorable momentum. Areas not in the way. You take the perfect entry and you manage aggressively because you know that it's a medium probability trade. What a great job. John, Nexgen is, obviously, I'm going to lean bias. My brother wrote the software, created the algorithms. It's his company. But I trade it every day, and I'm still floored every day. And look at Safia's picture. Guys, these Fibonacci levels, if nothing else, if you're doing something that's bringing you success and you're demoing, going, man, I wonder if this will add something. Knowing these levels, being able to identify when they're likely to hold and when they're likely to break, because the average trader without this red line here is probably holding a long position and wondering what the hell happened, right? You guys are seeing it, waiting for the reversal, and just plucking money right out of the market. Safia, great job. Great job. And then a great looking test from a brand new user. Thank you for posting. Guys, don't ever be shy to post a picture in here. All right, we made it through pictures. So Gary asked a question in the room. He said, Mark, can you talk about the momentum trade? Absolutely, I can. So I'm going to go to Discord. I'm going to go through. This is where the momentum trade is discussed. And let's just read rules. Because I think so often we see other people take a trade and we want to do what they do, right? I do it. I tried to be my brother for almost 2 years. As a brand new user, I tried to trade like somebody with 20 years of experience. It didn't work for me. In fact, it hindered my forward progress quite a bit. I never built a foundation, and I was trying to take advanced trades. So let's read the rules first. And the rules say momentum trades using one-to-ones is a must on these. So what does that mean? That means that if you're practicing on simulator, the first thing you always have to remember is that one-to-ones are a must, right? Start making that checklist. A good trade example using one-to-ones after a good top or bottom, price bars on the correct side of the 13-2 small triggers, guys. So here's your rules. Strong 13-2 trigger lines on the large chart must be true. That means that you have to have momentum down on the 13-2, right? Termination condition has to be true, or false or no trade. You can't trade into a termination condition. You have to have a clear path. So far, aren't we recognizing how a high probability trend trade sets us up for the next trade? We can identify strong trigger lines. We know exactly what that looks like. We can identify termination conditions. We know exactly what those look like. And then we're going to check the 5-1 small trigger strength and location relative to the 13-2 small triggers. And we're going to enter on a pullback at the fibs, mid-band, and one-to-ones below the 13-2 triggers. -20, Gary, that's just too cold. So you've gotten a little extra. What's going to help? Here's the rules. Create a checklist. And then here's your first picture. There's a great top on all Fibonacci charts. You know what? Let me open this up so that it's bigger. Great top on all charts. How do we define a great top? Man, it hits that Fibonacci area. 0 triggers go through. Awesome. The market begins to push down, and it pushes down fast. Look at that small triggers. Everything says giddy up. Small triggers get below all of the trigger lines. Every chart has small triggers angled strong in the direction of the trend. Momentum, hence the name. On the 5-1 chart, a small stab back to Fibonacci to 1-to-1, so that mid band. After the conditions are met, you enter on momentum, and then you're chasing on a reversal bar, because any up bar is a loss of momentum. So Gary, there's your rules. There's your look. And now, if you want to incorporate, not just Gary, obviously everybody, if you want to incorporate the momentum trade into your plan, I sound like a broken record. Start over. My trade is the momentum trade. In order to enter the trade, the conditions of this checklist must be met. And you're going to do it. You're going to take pictures. Yeah, Discord is a great resource, isn't it? And then John, believe it or not, has built a checklist for all of his trend trades, for his HVA trades, and Gary also his tops and bottoms trades. So if you guys want a little cheat sheet, if you want to look at a plan that's already been built and then make it your own, you know I'm going to give it to you, right? What's John going to do? Fire me for giving his stuff away? I think it is in Discord, but now you have it right in the room too, guys. So every time I add a trade, I have to rewrite my plan, or I have to amend my plan. Every time I change direction on what I'm doing, guys, look at the S&P. Small's above the large are wide, they're angled in the direction of the trend. I don't have a termination condition. My rules say if I get a reversal bar, I have to identify my window of opportunity inside of favorable large triggers. And when I identify it, I'm going to right click on my simulator and put my limit order just a tick or two above. Give me a Y in the room. Guys, this is what we call a pre-trade picture. I can take this picture, right? Guys, did you see how quickly I was able to do that assessment? And now I can come through and I can make sure. Is the market coming from a good top or bottom? Absolutely, right? Did I have odds favorable momentum? I sure did. No termination conditions? Absolutely none. Did I have an area for entry inside of favorable large triggers? Yes, I did. I don't know if I got filled or not. This is a trade that typically wins 70 to 80% of the time, which means that it provides me a statistical advantage, which means that I'm obligated per my plan to take this trade when it sets up. So I'm going to take that pre-trade picture. I'm going to get my screencast link. Oh, look, it did fill us, didn't it? And I'm going to open up my spreadsheet, and I'm going to put it into my spreadsheet. Guys, I don't call trades in here. This is 100% educational. If I'm mechanical, if I'm waiting to see, don't I need a reversal bar in the direction of the trade? I'm waiting for that one. I've got a 12 tick stop initially. Guys, this is the perfect look. These guys are going to have to come get me, right? I'm not going to let them. I'm not going to arbitrarily move stops. We'll see what happens on it. I'm not worried about it. Crude oil. Nothing to do on crude oil, right? Oops, stop movement. Sorry, guys. First target hit. I'll go to break even. Momentum says I'm more than likely going to reach this Fibonacci area of resistance, right? I've hit a trouble spot. I've got zero loss. I've already got $200 in the bank. Guys, what could possibly go wrong for me right now? Anything? What direction is the 13.2? Remember, 13.2 leads the way. Somebody tell me what sort of momentum I have on that 13.2 chart. Up. Rob, is it strong or is it weak? I can identify where the market's likely to go, can't I? I can say if I get a loss of momentum, a second divergence, this is how I can use that reversal bar marker. I'll exit the trade as the triggers start to come through. You have to create a plan. If divergence prints with my small triggers below the large, my stop's in a place to exit the trade. There it is. Because when my triggers weaken, when my smalls are inside, when a second divergence prints, it may push lower, guys. I have a high probability trend trade. Every rule met. Look at the entry, guys. How did we do on that trade? That was a $362.50. My ability to read my charts allowed me to recognize that things were changing a little bit in the form of momentum. And I'm in this business to make money. I'm not in this business to hope. It still may reach that next area, but my management plan says when I begin to lose momentum and my trigger lines are not odds favorable, I'll sit and wait for the best of the best. All right, guys, give me a Y in the room. I don't run my simulator very often in the room, but this was the perfect look. How do we feel about the entry? Can you do this? Maybe not yet. Why do we keep it mechanical? Guys, if you had that mechanical trade plan that I talked about, enter at the area, take profits at 87.50, take profits at 89.50, you still had $300 in the bank and never even had to worry about that second divergence. Guys, this is what we do at Nexgen. We teach you the rules. We teach you to read your indicators. You put in the time and effort to make sure that you understand. You raise your hand if you need clarity. But ultimately, this is what we do. There was a market flow signal too. Michelle, did you need it? If you needed a market flow signal, you don't trust your rules. But I love it. And guys, now I can go back and I can police myself. I can verify that my rules were met 100%. I can verify that I had the advantage of momentum, of a clear path, and I had the advantage of an area where the market is likely to continue. Guys, so much so that I waited for the market to come to me. And then the next thing I have to do, right, is I have to come through. I got my pre-trade. So now I'm going to do my post-trade. And I'm going to come through, and now I'm going to talk about why did I do what I did? Why did I get out where I got out? Because everything I do, I want to log for. I want to know why I did. I took profits at $200 on my first contract. When smalls returned to large on 13, momentum is slowing. This is exactly what I saw. Second divergence with smalls inside large on 5, confirmed loss of momentum. Took profits on second contract because it may push lower. So guys, we had our pre-pick, right? That's going to go into my spreadsheet under the best of the best looks. And now I have my post-trade, my management, how I handled and how I reacted to what I saw in my charts. So I'm going to hit share and I'm going to upload it to Screencast. And I'm going to go to management things. And I'm going to post this into it because this is going to be a great lesson as I begin to develop my management plan. We'll just call it slow down exit. Guys, welcome to Nexgen for those of you that are brand new. And look what happened. Divergence prints. I know that it may push lower, and sure enough it does. Another divergence prints. 3 divergences in the same general location, right? Momentum's going away a little bit. It may push lower, guys. It may not. I'm not in control. But can we agree that my rules are no longer met for an entry? I hope so. All right, let's see what we have. Safia, have we seen this one yet? Safia, you said, is this the one you bended your rule a little bit? You took the low momentum entry, didn't work out. That's okay, good look. Oh, and then you fight triggers, and you fight triggers a lot. Putting a lot of faith in that termination condition, Safia. And I'm not going to knock the trade, but Safia, I want you to see all those yeses that you put on your checklist. I'm not going to beat you up here. But if you put your rules on your chart, I have an educational obligation to take a look, right? Is the market coming from a good top or bottom? It's not a termination condition that creates a full reversal. Let me change color so it's not the same as you. That's a no. Do I have odds favorable momentum? That's a no. No termination conditions on the 13-2. Well, every trigger line is below resistance. That's a no. Did I have an area for entry inside of favorable large triggers? My triggers are down. That's a no. So Safia, you may have gotten lucky here, right? Does that make sense? And then this is where I share the tongue-in-cheek, the John Novak's book. And Safia, you made a lot of money on that trade. But the easiest way, how to commit financial suicide in one easy step, this makes me laugh every time because I've done it. Chapter 1 and Chapter 2 were more like an autobiography for a while. Trading against strong triggers like you did. Trading into termination conditions just like you did. So Safia, while that one felt good because of the win that it produced, it's very low probability. And the odds of you winning this one, I don't disagree with support likely to hold or the overall direction of the market. But that little bit of patience, let the smalls get up here a little bit and look for an opportunity. It didn't give it, but that little bit of patience is going to help you a lot. because it's a good read. Pivot didn't make it to the next area, pulls all the way back to support. We can anticipate continuation. It was a great read. Just that little patience piece is going to help a lot. Nice job. And Safia, you are reading your indicators really well. NG time. Let's see. Rule number 1, odds favorable. Yeah, we're a little flat up top, I think, but we're coming that way, right? You got the entry at the pullback, seeing large triggers down with flat synthetic. Took a chance on this, almost stopped out. 50-50. No divergence. No real momentum helping out NG. But what you did have is everything down, everything down, everything down. You had a high volume area. And notice how it pulled right back up to those synthetics. So great stop placement on a market that looks like it's about to continue that way down. It's a lower probability trade, but I think your execution is absolutely beautiful and your stop placement is absolutely beautiful. Great chart reading to produce great results. And then Ed, your pictures hate me. I don't know why. I'm going to figure out it eventually. Once again, everything says up with all sorts of giddy up. You take the picture perfect trend trade from the best of the best spot. And if I'm not mistaken, it may have caught your second target. I'd have to look at my picture. I don't remember. Nice trade. And then Safia, we just looked at this one. You posted it twice. Good job. Other picks there, Ed? I've got one from you there. Did I miss one? I've got that one, and then I had Safia's, and then I have one more for you next. Guys, if I ever miss a picture, let me know. But if I can't open your picture, it will let me know. There we go. And perfect. Profit targets reached. Sorry, Ed. Safia snuck one in there on you in between your pictures. Beautiful, right? Any reason not to take this trade? Ed, what happened on that entry, though? Can I guess? Will you tell me if I'm right? Remember, guys, I've been teaching this class for a while. So Ed had all of his rules met on the 13-2. And he knows where that order goes. And he's right here, right at that mid-band, ready to get it, right? And this may not be right for you, Ed, but this bar right here started ticking up before it filled his order. And Ed said, oh shit, pardon my French. It's going to go without me with all that momentum. So he entered the market, and then it came right to where it was supposed to. Am I right? I may not be, but yep. Guys, I recognize patterns not only in the market, but also in people. And it's kind of cool because when you look at from the user guide, and we talk about those perfect entries. I used to put this in my class, and maybe I'll start doing it again. I used to take this picture right here as an example of why we trade from areas. You drew the pre-pick right where it's stopping, huh? So what are we looking for? We're looking for the top of the triggers to the bottom of the triggers. I'm going to give you guys this one too. So there's top to the bottom. We'll do that in yellow. And then our actual window of opportunity goes from the highest support to the lowest support, right? So trigger lines, window is within. And then guys, I used to show this picture. If you're watching ticks and not following rules, this one's going to get you every time. You're going to see it start to go without you, and your fear of missing out, right? Let's go define it real quick. For those who, I had never heard it actually until I started teaching this class. The fear of missing out can cause investors to make riskier choices than they otherwise might. This includes getting in early with a much larger stop, which doesn't guarantee a win, only a bigger loss, or getting in late without the proper advantages. So when I'm looking at this picture, guys, if I get in because I think the market's running without me, what have I done? I've reduced my profit potential, and I have completely exasperated and just intensified the risk that I have to put on the trade. This is real. Fear of missing out is real, guys, and I will never pick on anybody for having it. But what happens is the more you trust your rules, guys, the more you adhere to a set plan, that fear of missing out goes away. And obviously, I've been studying these rules for a while. But when we took the pre-trade picture, did I sound nervous? Did I sound like, oh my gosh, I hope this works? Didn't we even take the picture and I got filled during the picture? And then we went and looked at another chart. And I came back to move a stop. Guys, when it's this good, you won't care what happens. You'll take that thing every time. What do we see currently? Smalls below the large are wide, they're angled down. I have divergence on a 5-1. Guys, what's divergence mean? It means we have a little loss of momentum, right? But I do have odds favorable. I do have odds favorable. Am I coming from a good top? Nope. Just a pivot from the middle of nowhere. So guys, now we have, remember I told Safia, we get these pivots from behind the area, from beyond the area. They love to come back to that midband and support and try to finish the move. This is another pattern. Whoops. When price exceeds all of the key Fibonacci areas, very often it continues. Price exceeded all of the Fibonacci areas, didn't reach the key area, and it pulls right back to that support on a 50-50 with a loss of momentum. Guys, there is the potential based on patterns, based on an understanding that the market repeats itself over and over. There's the potential that the buyers push up from support, the sellers fight back to midband and support, they go for that fib again, the sellers push back. Now a 50-50 with a loss of momentum, the potential is there that they may try to finish the move. They may not, but knowing this pattern, coming into a 50-50 with divergence, it may keep me from taking that trade, right? Do you see it? What do you think, guys? How many times have we seen it today? Let's see. I love this stuff. This is fun for me. I hope it's fun for you. Termination conditions hold. Price pushes from resistance, doesn't make the key area, comes all the way back up, makes the key area. Pretty much just goes from support to resistance, fib to fib. I love that. Resistance to a key area, back to resistance, watching that fight. They push it down to the next key area. Support, doesn't make it. They try again. The sellers push back all the way to support. And look, guys, the buyers got to their target, didn't they? Just took them a little bit. It's a pattern, doesn't repeat itself every time, but it repeats itself enough to create an awareness when you're making decisions about 50-50 trades, doesn't it? Does that make sense to everybody? Everything we do is patterns. It's the patterns in the market and it's the patterns within ourselves. My job is to teach you to identify patterns in the market. Your job is to present everything that you do so that I can recognize patterns in you. Absolutely. So John, when you open your software, let's go to, so here's the middle of the night. These fibs have held true. Those stopped printing at the update time. So your market's going to update. I've got it set up to update every 2 hours, especially in volatile markets. But some fibs will run the extension of the day. You can see where some come and then where they're no longer there. So yeah, it's not lagging. It's 100%. And it's a cool thing. When you open up your software, and guys, I remember this from 20 years ago, John explaining it to me when I really wasn't smart enough to understand it. When you open your software measures every pivot in the market, every up and down. And then it creates synthetic time frames forward. It creates, it looks historically. It makes synthetic time frames. And do you guys remember, let me see if I can find it, because most of us are the same age in here. Do you guys remember Yar's Revenge? And there was all of this multicolor stuff. Guys, this is what your software looks like before John Novak's algorithm. Every one of these represents, I'm going to save this picture. Every one of these represents an area of support and resistance, and then the software weighs it, measures it, sorts it, and gives you these support and resistance levels. We can use these levels, and when John was writing the algorithm, he had a friend in the pits in Chicago. Jose, have a great day. Enjoy your weekend. Stay warm. He had a friend in the pits in Chicago that he would call every morning before the market opened. And the guy in the pits, his job was to know where the institutions were buying and selling. And John said that he got the algorithm to a point to where he was within about 50 cents each time. And that's when he knew that he had finally gotten it, that he had perfected it, that he'd gotten it to where it should be. Pretty cool. It's amazing. It's amazing. Jonathan, I'm going to right click and I'm going to go to indicators. Dun, dun, dun. Let me make this big and then I'll take a picture for you too. If you run the new installers, it'll get you there. But if I highlight the Fibs ProTrader, where is it? There we go. Let me take the picture and I'll show you. Your fib update period. You can set it to 120. Whoops. How about if I do one that you can actually see? If you set it to 120, that's going to have it going every 2 hours. Or if you don't want to touch anything because you're afraid you'll break it, you can run the installers on the site and then that's going to help you do it as well. It used to be 4, but we were seeing a lot of volatility and we wanted to make sure that everybody was getting everything that they needed. Absolutely, no ways. Guys, what's missing here? I've got odds favorable momentum, right? I've got no termination conditions. I don't have an area inside of favorable large triggers, do I? For a high probability trend trade, guys, I really didn't have an opportunity there if I am a stickler 100%. But a little pattern expectation, right? Odds favorable, triggers up, everything says up. Let me look at an additional chart. Nope. And it didn't quite make the HVA trade, guys. Didn't quite make it back to this high volume area. So if you're following rules to the letter, you didn't get an opportunity. But you sure might get a little stab back to those small triggers that have rolled right at a mid-band, right at the large triggers. Maybe an opportunity for continuation. Ed, let's see what you did. I'm going to remember eventually that I can't open your links. I have no idea why. Ed on the ES. Looking at those one-to-ones, right? Saying, "Ooh, I don't really want to trade into those." And you are out at resistance, likely to stop the market. Pull back to the large triggers. You're looking to buy. Is that right? Or are you in a trade here? Looking for the HVA. Okay. Never made it back. In those HVA trades, Ed, that's higher time frame 1, higher time frame 2, higher time frame 3. Absolutely, Jason. Get them all. And I'm pretty sure, I'm not definitive. Ed, you're looking to go long into a termination condition is one challenge that may be there. Jason, if you need help, just in case, like if it doesn't work, just get Jason on with real quick in tech, and then you'll be good. But Ed, talking about the HVA, I like that you posted that. I want to go to Discord real quick, and once again, let's go to the HVA rules. And oh, that's trend trade. My apologies. When I click on that HVA rule, the high volume green or magenta line should be inside or at the trigger lines, Ed. And what you run into on your picture is it's way, way below. And at this point, it's not really an HVA trade anymore. You're better off looking to be on the correct side of everything rather than hoping for continuation below everything. And guys, then there's that loss of momentum as it pulls back. If you took the long trade there, your stop's about right here, and it looks like they may come get you. They're waffling a little bit. There's a fight. You'll also notice that your synthetic triggers are all the way down here, while your large triggers are all the way up there. They're a full bar away, remember? It's likely to close the gap. And where did it close to? Right at those synthetic triggers. Good stuff. Let me see where we're at. Gary, I think you're next. Maybe Jose, Earl. Nope, we got a couple of them here. All right, Ed, I think we saw that one. So we are on Gary. Gary took the trade. Absolutely beautiful. Divergence prints, exit with divergence. The stop was below the HVA. I like it. Great trade, Gary. We got to watch that one live today too, didn't we? Talk about management. Earl, picture perfect. 50-50, no divergence. You take the high end of the area, keep the stop in place. When that divergence prints, small triggers inside, exit the trade. Great execution. Jose, odds favorable, no termination conditions. Pull back to those one-to-ones a little bit below. I like that. That's good heads up. Hop in, hop out. Jose, making money. Nice job. I think that was the end of your day, you said. Good job. It's nice when you hit that profit target. And then Gary, 50-50 with divergence. You choose not to take it. And it turns out that was a great idea. Good read. And I think we talked about that one a lot in class. Pattern expectations. All right, Ed. One-to-ones. You were looking for the pullback to the large triggers. And we know that one didn't get you. Elvis, you say how to never lose on sim. Indetermination conditions, right? Indetermination conditions. It's fun to be aggressive on sim, isn't it? Elvis, none of us will ever be. And guys, this isn't for Elvis. If Elvis chooses to listen to this message, that's entirely up to him. If you choose to listen to the messages, it's entirely up to you. Guys, I'll never tell you what to do, and I'll never tell you what you're doing is wrong. But I will point out when you're putting yourself in a situation for long-term failure. And one of the easiest ways to do that, guys, one of the easiest ways to set you up for long-term failure is practicing the wrong trades. If you're breaking rules, and Elvis, I'm not saying that you're breaking rules, but if you're trading in determination conditions and getting lucky and taking wins, if you're using astronomical stops because you're on simulator and it's not real money, guys, you're not practicing like you want to play. You're creating muscle memory that'll be detrimental to your long-term success. And that's on you. That's what you want to do. If that's what you want, that's cool. Go right ahead. Whatever. I wish you the best of the luck. But for those of you that don't want to practice long-term success, you have to come up with a set of rules for entry. You have to come up with a set of parameters for exit. And then you have to commit. Whether you're on simulator or whether you're live market, you have to commit to following your rules 100%. Since it's Friday and it's story time, guys, I used to race motorcycles. I used to road race, endurance race 600s, and it was fun. And I was out in a practice one day, Texas World Speedway, having a good time, and I'm cruising at about, 70%. It's a practice. Why do I want to stress? Why do I want to risk a crash? There's no trophy at the end of it. And the guy who would ultimately be champion that year, Bradley Champion, oddly enough, passes me around the outside of this horseshoe, just railing, almost with his elbow on the ground. And I'm like, man, he sure is pushing hard for practice. And he comes up to me in the pits later, and he's as serious as a heart attack. And he goes, Mark, what the hell are you doing out there? And I said, man, it's just practice, Bradley. I'm not going to go fast in practice. I'm just going to practice. And he goes, how are you going to perform during the race? How are you going to be able to push during a race if you've never pushed before? How are you going to be able to react to pressure if you never put yourself under pressure? Guys, simulator is the exact same way. If you don't care that every indicator is down and you go long without a plan, and it gets lucky and you think you're brilliant, you're going to do it when you go live and you're going to lose a lot of money. If you don't take the time to study, if you don't ask for help, if you don't get a coach, you're setting up for long-term failure, guys. So do whatever you want to do, right? Do whatever makes you happy. Take whatever trades make you feel like they are the best of the best for you, but show me your rules. And I'm not picking on anybody because that's not my place to do that. But I'm going to tell you, if you show me trades that fight, that are aggressive, I'm going to try and help you do it better, right? Going short into a termination condition, going short with the trigger still up against momentum, trying to go short. Guys, there was a gentleman that was a client of John's, and do you guys all remember that big S&P drop, that huge drop, and a lot of people lost a lot of money? John had a client, 100 points. You remember. So let me show you. Because I remember when this happened. It went down, but we're going to use up for the example, right? John said, all right, it's got to go down from here. His client said, it's got to go down from here. And when it went up, he added to his position. Well, it's got to go down now. And when he was losing, he added to his position. It's got to go long now. Or it's got to go down. 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 And the guy lost $12 million in about an hour. You guys have an advantage here, guys. You can recognize momentum and when it's for you or when it's against you. You can recognize areas, whether they're likely to hold, whether they're likely to stop. Everybody's going to use a different approach. Did I miss the small charts, Elvis? Perfect example why pulling the stop loss back to not lose is absolutely insane. I agree. And Elvis, I love that you have this awareness and this recognition. And more than anything, you have the courage to post in the room. Hey guys, this is kind of a mistake that I'm making right now. Learn from it, right? Have a set stop limit. No, Elvis, you're always in good standing with me. 100%, because you're receptive to lessons. And just like the rest of us, you realize that we're on a path to getting the most out of the software through our own tolerances, through our own risk tolerances, through our own ability to see things with clarity. And it's good stuff. Guys, I need to reload my water real quick. I'm going to leave you with the S&P. We took a picture quite a while ago that said that the buyers may be trying to get up to that 41.93 area because they didn't make it the first time. They may not, but they're sure giving it an effort, aren't they? It's Friday afternoon. There's a huge fight going on in the market. Make sure that your rules are clear. I'll be back in just a second, and then we're going to finish the last of class, guys, with your questions, with your concerns, with anything that I can cover for you. Whether you want to talk about entries, exits, I have a picture set. Oh, I'm sorry. Looking at CL, if you start trading and see such a drop, you suffer from fear of missing out and just want to jump in. Can you look at it and give any pointers? NG time? You're going to hate this answer. Follow your rules. I don't adjust my rules based on my fear of missing out. If the market goes without me and my rules aren't met, then NG time, I don't have a trade. Look at that. So here's the flip side. Are you ready? I'm going to give you a different way to look at it. I don't have any pointers at all, NG time, because I don't just jump in. But I do know that there are people that trade the software that when key areas break and they have a ton of distance to the next one and everything's going fast, I've seen these guys pull an enormous amount of money with a clear path and momentum using a different approach for entries. So what I would say to you is study. Watch this. When everything says down, when the areas are clear, when the market's trending aggressively, and everything says down, I want to see what this area looked like on my 5-1. NG, was there a break through the area and a stab back right to it with no divergence for maybe a potential entry? You have a beautiful line to put a stop behind, and you have a very clearly defined target to keep it aggressive. So NG, your job is to find this scenario 100 times, to take this picture 100 times, and to be able to tell yourself, I know without question through my study that this look creates more winners than losers. And then it's time for page 2 on your plan, NG. You're going to start all over. You're going to write a plan with a set of rules and a checklist to get you into this trade because it has been proven through study to win more than it loses. Does that make sense, guys? NG, I will never tell you to just jump in, but I'll tell you that if your rules are met, take the trade. On a trade like this that's outside of what I teach, well, what John said is when the market is trending, meaning that 30 bars in the same direction, 3 Fibonacci areas broken, conventional wisdom says sell the midband until it stops working. Eventually, it'll stop working. You never got an opportunity on this one. Something happened in the market and somebody either dumped all their contracts at the top or sold all the contracts at the top. So Rob, what are the tails? The tails are pullbacks, right? That's all it is. So as you do your study, circle every tail. Did it reach an area? Was an area cleared? No. No clear path. No triggers through. Divergence from support. Not to an area. So not an area there, right? Not a conservative approach. Let's see what this tail did. This one began to clear the area and it pulled right back to resistance and then went down. So Rob, maybe this is a look that you're willing to take. There's not even a tail here. Here's a tail directly into support. It's easy to say after the fact, dang it, I should have taken this trade. But it's directly into support with divergence. So do high probability. Learn to read your indicators. But guys, you will develop a plan based on what you see. You will develop a plan based on your comfort levels. Nexgen provides you a plan to teach you to read your indicators so that you have the ability to develop a plan. That's all it is. You're not in control. You can only take a high probability scenario that creates an opportunity. That's all you can do. Gives you a statistical advantage. Guys, need to talk to the man about the thing for just a second. When I come back, we'll finish strong and I'll catch any pictures that you looked at. I'll be right back. Looks to be an epic battle going on the S&P, don't we, guys? Do you see it? What are we looking at here? Let's look. I like to remember where I fit in the food chain, and it helps me a lot. I'm going to pull up the S&P, guys. This is the last hour or so. Let's just talk a little bit about what's going on. Well, there's two types of people in the market, guys. There's sharks and remoras. Sharks have the ability to make the market do whatever they want. Sharks have the money, the resources. If they want it to go up, they just flood the market with money and it goes up. They want it to go down, they take profits, they sell. Guys, we're not sharks, but we can be remoras. We can wait for the sharks to create a top. We can wait for the sharks to establish momentum. We can wait for all the advantages to come about from their hard work, and then we'll be a remora. We'll take a little chunk out of there. We don't have to hit the home run every time. We'll take a little bit each and every time, guys. You don't have to be first. He gets eaten. So sharks and remoras, I love that analogy. And I'm not good at analogies. So what's going on? The buyer sharks push all the way up to resistance, right? All the way up to resistance. And then at resistance, the seller sharks push it down to support. No rules met, no remoras get eaten in the process. Hell, I don't know, Gary. The buyer sharks push all the way up to that loss of momentum, and the seller sharks push right back down to support. Once again, termination conditions. Next-gen users staying out of trouble. Buyers push it all the way up. A lot of you guys caught along, made some money, until the sellers pushed all the way back to a 50-50 with divergence, where the buyers took over, the sellers fought back to the large triggers, the buyers took over, the sellers fought back. And now look at the trigger line position. Small's below the large, right? The large are weak. Guys, there's nothing for next-gen users trading high probability trend trades to do here. What else do I notice? I've got 3 losses of momentum in the same general price range on a big chart. That's a pattern. There's a mid band. Guys, there's a huge fight going on right now. The buyers are still trying to get to that line, right? They might, but they've got some very severe lines in the sand to get through in order to make it happen. So it's all right to sit on your hands. It's all right to do nothing. It's okay to sit around and not really hang out. Gary, great trade. Smalls above, pullback, mid-band, rules met 100%. Didn't work, and you got out quick. Gary, did you get out too quick to give it a chance to work? You got in after market flow. I'm assuming you had your stop below the market flow signal. Gotta let them marinate, guys. It did go down, but did it tell you it was going down when you exited? Or did you panic stop? There's a big difference, guys. Did you have a reason to do? Did the indicator support what you did? You never got a reversal bar on the 5-1, so you didn't have a place to tighten your stop so much. You're still inside of large triggers, and really, you're right there at a mid-band inside of favorable large triggers. Your smalls are still outside the large on your 8 range, on your 5-1, and your 13-2. Now, you may have had a reason to get out, or you may have gotten scared, and then the market just validated your fears. But what if it did what the indicator said? And the indicator said that it was most likely to go up. based on a rule that produces a statistical advantage that you can take over and over. Who am I looking at here? NG time, trying to catch those moves. All right. Keep practicing it. I like it. Ed, you say maybe not for class. I'm okay. Do you have rules for it, Ed? Oh, right on, NG. It looks like you came back and played with it on the 8 range to take some decisions. But isn't this just patterns? If you know where the market is likely to go based on patterns, can't you create a set of rules maybe that use an additional chart to get in and out? And guys, Ed's an adrenaline junkie, so he's gonna build plans that help him stay busy. And I'm okay with that. I think it's wonderful. Do what you do, right? Gary, you took the pullback and canceled it because you thought it was going against me. You thought it was going against you. All right. Got to commit, guys. Eventually, you'll know and trust your rules so much that it's easy to commit. If you find yourself arbitrarily moving stops so that you don't lose, then you don't believe that that trade wins more than it loses, probably. And it means that you're not okay with losing just yet. I'm going to share this real quick because it's Friday and we get all philosophical on Fridays, right? Guys, normal losses are part of a natural upward equity curve, and the key is to not have abnormal losses. Abnormal losses are failures in execution, not following your rules. Trading without fear, hesitation, or internal conflict is a function of believing you do not have to know what is going to happen next on a trade-by-trade basis to win or make consistent money. You relinquish the power and you leave it to the sharks, right? That's what you're doing. And when you stop expecting to win every trade, you start winning most of your trades. When you quit caring about the results and you worry about the process, things tend to work itself out. I use golf analogies a lot because I stink at golf, but I want to be better. And when I decided to golf again, guys, I decided that I was going to YouTube my way to the perfect golf game. And my swing was garbage, and I approached every hole wanting a birdie. But my swing was garbage. And it wasn't until I focused on the process. When I focused on the mechanics that gave me the advantage to hit the ball where I wanted to hit it, that I started seeing results on the golf course. Hey, look, guys, they made it. How cool is that? What time was it when we started talking about that? It was 10:38. It was 10:38, guys, when that pivot happened. It was right at 11 o'clock when we talked about patterns and expectations. And it took that market 40 minutes to do what pattern recognition lets us know what it typically does. Pretty cool, right? There's the picture right there, 10:57. At 10:57, we drew this picture. At 10:57, we said based on patterns and expectations, that's where the market is likely to go. And guys, it made it. But there sure was a fight to get there. You can begin to trust these expectations just by studying over and over. Pattern recognition. Ed, let's see what you did. Every trigger line is below resistance. First one doesn't quite work. You take quick profits when the divergence prints. Just based on termination conditions, Ed. You've reached an area likely to stop the market. Based on the gap theory, it's likely to close it down to the large triggers. Hey, Ron, take care. Thought for the day. Marriage is psychological. One psycho and one logical. Oh, I'll let you know how that goes over with my wife later. I like that. I'm not sure which one I am. All right. Ed putting on a clinic of chart reading here on the 13-2. Loss of momentum. Market pulls all the way back to an area likely to stop the market based on trigger line location. Large triggers don't follow, remain more than a bar away, and price pulls all the way back down to those large triggers. Ed says, I'm losing momentum, but I'm in a huge downtrend. I'll sell the mid-band till it doesn't work. Takes profits down at the small triggers. He goes, this is my trouble spot. I'm not going to hope. Market pulls all the way back up, and Ed said, man, all of my chart reading says it's likely to go down. It takes profits at the trouble spot. Ed, absolute clinic going on there. It's all chart reading. That's all it is. Nice job. And then this one going into a termination condition. First one, super aggressive. Second one, using that 8 range chart with everything down, taking profits. Once again, same concept, different time frame. Doesn't matter what time frame you trade. It doesn't matter what market you trade. Yeah, that was just the 8 range. I recognize it. Can I give you guys the Discord tour? We've got about 20 minutes left. We're coming into lunch. As you go into the weekend, self-training, everything you need to be on that path, guys. Everything you need to get in that right direction. Everything that you'll find on the website, consolidated into Discord for you. Your trading rules with pictures so that you can start to formulate a plan if you haven't already. And I believe at the bottom, this trade checklist zip file is the high probability trend trade, the HVA trade, the momentum trade, and it's also a copy of that example plan if you want to download it. As you learn to read charts, there's a whole section dedicated to chart reading. This is 25 years of experience from John Novak going into pictures, going over patterns that he recognizes, patterns that he wants you to recognize, patterns that you will ultimately recognize. Guys, one of the patterns you're going to see in there is this same one. Expectations based on Fibonacci areas and what's happening in the market. Guys, I used to believe that John was some sort of witch when he would say, no, we're probably going to 93.25 before we do any other big runs. And it was because of chart reading, because of expectations, that he would do that and absolutely blow my mind. Don't tell him I said that he impressed me. As you grow, there's advanced chart reading, getting you to that next level at the advanced level, where you start seeing more and more patterns, maybe more and more opportunities, maybe more and more ways to manage a trade. There's a whole section dedicated to example trades. These are trades that are coming out of the traders chat area. These are trades by users with 3 months, 3 years, 13 years. These are different chart looks. These are different approaches, different methodologies. Everything stems from Nexgen, and everybody's using it different. And some of them are relying on time-tested methodologies to take profit. You do have the opportunity to ask questions. You can go in here. I believe that John and Chris come through and check it and go through. And then guys, there's the traders chat area. This is where the people that have been doing it for a while, this is where the people that have written plans, that are being consistent, are doing what they do, and they're sharing what they do, right? There's Siva using an 8-range chart. Siva's been with us for 17 years. The only thing, if you go to the traders chat room, guys, you're going to see a lot of people respect boundaries. You can ask them what they're doing, right? You go, hey, what are you doing? But remember that these guys are trading too. Don't turn them into teachers. Don't hound them. If they want to answer, they'll answer. If they don't bombard them with private messages. We are very much a community, and communities do have boundaries. Guys, look how the market turned off at 93 and a quarter, 94. The buyers made it, and they just said, to hell with it. We got right where we wanted to go, right? And Ed, you're absolutely right. You're not going to understand until you have experience. I had a neighbor that was a Harley rider once, and I was a motorcycle mechanic for a couple years. And he told me, he goes, man, I got to take the bike to the shop and get the carburetor cleaned. To which I replied, oh man, it's easy. Just drop the float bowl, pull out your jets, go through, soak them a little bit, make sure that they're good, set your float level, put it all back together. You'll be good as new. And he looked at me like I was just speaking a completely different language, because to him I was. I forgot that he wasn't where I was. He didn't see what I see. He doesn't understand what I understand. And guys, that's one of the things about this classroom. I understand that everybody's at a different place. We're all on the exact same journey, just different places in the road. So ask your questions. There are no silly questions. And if I give you an answer that doesn't make sense, let me know. Because every now and then, I'm going to forget to drop a level. That's it. NG time. Let's see what you did, bud. And let it be fun. Life is short. Termination condition, full reversal, 50-50 trade, no divergence. You take the entry. You manage out at the first trouble spot, and you're at zero loss level. I'll tell you what, if you're going to take a 50-50 trade, and it looks like it's into a termination condition though, so it's more of a termination condition trade. You're trading directly into that resistance, right? So you managed assertively and got to zero loss. And guys, sometimes I'll just do that. I'll say, hey, NG, did you realize that you were trading into a termination condition? And he'll say, absolutely, Mark. Because of the conditions, I was willing to forfeit that advantage. And that's okay. But when you can read your charts and understand the challenges, doesn't it make it easier to create a management plan? Start getting reasons to enter a trade. Start taking reasons to exit a trade, to move your stops. Guys, it all comes together. You say the HVA trade on crude oil was beautiful. It would have had to have been back here, right? Coming from a termination condition. I don't think I have it. I may have an 8-range chart. So it would have been at 1136, termination condition. Triggers roll, pulls back to the high volume area. It doesn't go too terribly far. But that's a second trade that you can learn to give you an opportunity to get up to the trouble spot. And now they're just fighting their way down, aren't they? Support to resistance to support to resistance. They overrun a little bit, right back to resistance, and those large triggers never blink. Earl, let's see what you're doing. Earl, I love everything but your entry. Hey, Gary, be safe. We'll see you on Monday. Left lane's for passing. That's what my dad used to tell me, Tuesday. Have a good trip, Mark. Left lanes for passing. He was an adamant person about that. All right. Earl, are you with me? Guys, I'm going to put a checklist on this one. All right, Earl, good top or bottom? Not quite, because it's not really a termination condition. Everything overran, but we know, right? That's okay. That's not a deal breaker. It just gives us warm fuzzies. Odds favorable momentum? Absolutely. No termination conditions? You better believe it. So Earl, I'm going to show you this, not because I think what you did was a mistake, but I'm going to show you that rule number 3, waiting for the pullback to an area of resistance inside of favorable large triggers. Let me slide this over. Rather than being in at 49.75, Earl, you're in at 82.25. So 80, what is that, 2.5 points? That's a 2.5 point difference, which means that you could have had 2.5 points less risk. It means that you could have had 2.5 points more profit. So rather than making 2.25, you're looking at 4.75, right? It's that extra 2.5 points. What if that happens on 10 trades? That's an extra 22 points over the course of a week, 10 trades, by waiting for that rule number 3, a pullback to an area inside of favorable large triggers. Earl, you had every advantage on every chart and every indication that the market was going to continue the way it did. And then there's just an opportunity for you to figure out how to make a little more money out of this already great chart read. Nice job. I hope that helps. You're very welcome. Guys, some of you know exactly what you're doing. Always an opportunity to do it a little better, though. You want me to post that? Absolutely. Let me scale it down a little bit so you can see everything. And if we're going to post it, let's give it the lesson, right? Guys, I'm a big fan. If you take the time to write it, you're more apt to remember it. Rule 3, entering at midband would have reduced risk by 2.5 and increased profit the same. And what is that? That's $150? So 125. Thanks, John. I was an English major, guys. But guys, isn't it amazing? What if you went back and you looked at all of your trend trades and the entries and you started identifying, because you were studying your pictures, that you find yourself entering too soon? You're going to begin to believe in rule number 3. If you go back and you find yourself that you start exiting too soon, you're going to go back and develop a management plan that allows you to do a little bit better. Ed, did we already see this one? Nope. Same concept, right? Every trigger is below resistance. When it pulls back up to it, that's a good one. Not a true HVA, but a great indication of where that market's likely to pull back to, Ed. Nice read. And then using that large chart, that 13.2, pulls all the way back to a midband. When it gets to the midband, large triggers remain down and below, Ed, you took a perfect conservative approach. Let it do its funny business, let the triggers roll, and then when they came together, look for an opportunity to get down to that trouble spot. I like that one, Ed. 125 bucks a day extra over the course of a year is $31,000 on a contract that costs $500 to trade. Thank you for not making me do that math, John, but that's exactly where I was going with that. That's significant. Calculator is awesome. Oh, you know, you did it in your head. And guys, now we're just grinding down, aren't we? In the S&P, that resistance held. The buyer said, okay, I'm done. And the sellers pushed it all the way down to that next key area. Just for grins, they gave you a 50-50 trade. Smalls below the area, the large had not broken them. Divergence printed. Some of you felt like the market owed you money and you hopped in there at the area. And then it gave you an opportunity to get out for a small loss, if that was your trade. Good stuff, guys. Good week. A lot of live chart reading. A lot of great questions from you guys. If you're ever sitting in class, and you wish that you had the answer to a question, ask the question. We'll find it for you. John, you said you're done for the day early. You already worked out, ready for the weekend. You recorded the entire day yesterday on replay, so you can take it apart and digest some small lessons. Do the same. There's one stupid question. The one unasked. Challenge accepted, John Novak. I will come up with that one that makes you say, holy smokes. Ed, trading indetermination conditions without momentum. There's a lot of decafs that are just as good as the real thing, Ed. Keeping busy, right? Understanding the risks associated because of your ability to read charts and making decisions based on those risks. What a concept. That's true. Lack of knowledge is not the same as ignorance. One can be fixed. Guys, that's it for me this week. I've had an amazing week. I appreciate you guys being here. You know what, NG, I don't do them very often because the reality is that if you've been with Nexgen longer than a week, you understand that the high probability trend trade creates a statistical advantage, and it creates an advantage in the form of a trade that wins more than it loses. But if you're on day 2, if you're frustrated and struggling on day 302, and if I actually fire up the simulator and take an absolute rules met 100% high probability trend trade, and for some reason it's one of those 20 or 30% NG, I start getting hate mail from people telling me that I'm full of crap and the methodology is absolute BS and I'm selling snake oil. So I typically try not to do it. But the reality is when the rules are met, I'm very, very confident doing it. But not only am I teaching you guys, I want every one of you to be a lifetime member. I want you to embrace and enjoy what we do. So every now and then, but we'll talk through them 100 times, whether the simulator gets hit or not. You'll trade against them and take their money. Guys, great week this week. Y'all did an amazing job keeping this classroom active. I appreciate it. I'm going to be back Monday morning, 9 a.m. We're going to do it again. We're going to keep moving the right direction. Back to basics, and it's been a great week, right? NG, I hear that a million times. Get back to basics, and it's almost always a great week. So, good stuff. Guys, thank you so much. I really do appreciate you being here. I'm a better trader because of you guys making me focus on rules. I appreciate that. I'll see you Monday morning, 9 a.m., guys. Go do something fun. If you have sunshine, go get it. I have what appears to be 36 degrees in a wintry mix. I'm staying inside. You guys be good. I'll see you next week. Take care, everybody.